4 things you must understand and 4 numbers you must know when you are searching for a home. Okay, 4 things you must know and numbers you must understand when you're purchasing a home. And I get questions about these a lot. And they're questions, if you're not working with me or my team, it's important that you have this conversation with your lender, whoever that is, if it's not me and my team. And you must have this conversation also with your realtor, because they can give you some important insights on one of these particular variables that impacts your monthly payment. So the first thing I want you to know and understand is the impact of your purchase price versus your monthly payment. Now, this is important for you to understand because people will ask me often, hey, Major, should I put down a down payment, or how much of a down payment should I put down when I'm purchasing a house? And there are certain variables to that in some situations. But the number I want you to keep in mind when you're comparing down payment and monthly payment beyond the required down payment, if you need to know the required down payment, go back to my previous video that talks about different loan programs. But people often ask me, should I go past the down payment requirement, the minimum requirement, and put down more? You need to understand that every $20,000 that you put down on a home reduces your monthly payment by $100 per month on average, okay? Might be 95, might be 107, but that's a rough number for you to have in your mind. If I pay $20,000 down, or if I increase my purchase price by $20,000, I'm raising my monthly payment by $100. And this is important because people will ask me like, hey, Major, what's the difference between the monthly payment at $450 and $470 or something like that? The answer is about $100. Okay, so on a primary property, that's really not going to sway you one way or the other. Now, sometimes on an investment property, it might be a different conversation because you're counting cash flow and everything. But on a primary property, usually not a big deal there. But you need to understand how if you vary your down payment or if you vary your purchase price, $20,000 equals $100 on your monthly payment. If you want to cut that down a little bit, you can say $10,000 equals $50 or any variation therewith. So that's the first thing it's important for you to understand. The other thing that is important for you to understand is the impact of HOAs. Now, some of you guys are watching this video and you live someplace in Texas. Your HOA may be $30, $50, $60 per month. Some cases I've seen HOAs in Texas, at $100, $150 per month. But some of you are watching this and you live in areas like Miami, where my team helps people in Florida areas, or you're in Hawaii or Southern California, where the HOAs are much, much more. For those of you that are watching this and you're in Texas, there are people that are buying homes and their HOAs are $500, $600, $700, $800 per month. And that's not that absurd in some areas. And you need to understand how that HOA impacts your monthly payment. If you're buying a house and that HOA is, let's say that HOA is $500, okay? Let's say you're talking to your loan officer and they said, hey, you're approved at $600,000. You can buy a home at $600,000. If they didn't tell you, if you're going to someplace like Hawaii or something like that, and they didn't talk about it, have a conversation with HOAs with you, they're doing you a disservice. Because at $600,000, if you have a $500 HOA added on to that $600,000 purchase, you're not going to qualify at that $600,000. So you need to have a conversation about HOAs if you're going to a place that's prevalent for HOAs. And let's say that HOA is $500 per month. And let's take my previous example. You're approved at $600K, okay? But you're also approved, you also have a $500 HOA. The monthly payment for that $600,000 house with a $500 HOA is the same monthly payment of a $700,000 house with zero HOA. They're the same monthly payment. So your HOA, for every $100 of HOA, it robs you of $20,000 of purchasing power, okay? So you're seeing a theme here. $100 equals $20,000 of purchasing power. So keep that in mind when you're actually going out and you're in areas with HOAs. If you're not in an area with a large HOA, an HOA of $30, $40, $50 a month probably isn't going to impact you that much. But if you have larger HOAs in your area, you need to keep that in mind, okay? Next thing I want you to understand, the number I want you to understand is the impact of property taxes. All right, so I get these phone calls all the time, and they said, "Hey, Major, we were pre-approved at $700,000, and we bought a house in Hawaii. Our income's the same. We are selling our house, so we're pre-approved. We should be pre-approved at $700,000 again in Texas." No, you're not, because the property tax rate in Hawaii is about 0.3. The property tax rate in some parts of Texas is 2.5, 2.7, 2.8, could be higher in some particular areas. So the property tax rate could significantly or will significantly impact how much you're pre-approved for. And this is why it's important for you to have a realtor that you know and like and trust. And they must know their numbers also, because if you cross a county line where the property taxes are higher, it could put your pre-approval in jeopardy. Conversely, if you have a tight budget, they could say, "Hey, the property line is, the county line is here. If we cross over that county line and buy a property in this area, in this subdivision, or in this area, you could have a lower monthly payment because the property taxes are actually lower in that area." So property tax and the property tax rate is certainly a number that you need to be familiar with, you need to have an understanding with, and as you're shopping, you need to have that conversation with your realtor. The last thing I want you to have an understanding of is the impact of debt on your pre-approval amount and on your purchasing power. I see this all the time. Many people are upset or frustrated because they can't buy a house. And the truth is, they have a house. They're just driving it around because they have car payments that are $700, $800, $900, $1,000 a month. And for every $100 of debt, it robs you of $20,000 of purchasing power. So if you come to me and we do a pre-approval and I said, "Hey, you're pre-approved at $250,000. And you say, "Hey, well, Major, I wanted to get up to $350,000. I will likely say, "Well, the challenge there is if you did not have this car payment that was $600 per month, then you could have that pre-approval at $350,000, $360,000 for you to get the house that you actually want to be in." So understand this, when you go into these furniture stores and you say, "Hey, I'm gonna buy this couch and the monthly payment's only $100 per month," or something like that, or "I can handle this credit card charge because I could charge this on my credit card and the payment's only gonna be $200 per month," understand that you're actually robbing yourself when you go buy a house of $20,000 for every $100 of debt that you're actually paying on a monthly basis. That's 4 things that I want you to know, and those numbers must be in the forefront of your mind when you're purchasing your home. See you next time. Hopefully those 4 things help you and they don't hinder you as you're out shopping for your home. See you next time.